I'll be going from basic to advanced in this video in relation to my initial high-low strategy, really going through the exo charts, in depth of it, the basics of it from entry to invalidation. So let's just get into it now without any sort of crap. So to begin with, realistically, you need to have a high on the chart or a low. So literally just initial high or low put in the charts. I'll be going through some real-time examples as well later. But you're going to have an initial high in the chart. So I've just drawn this out as an example to begin with, where you've got an initial high, price spikes up towards a high, okay? And then it has this drop off in price in terms of the high. I'll show you the low later. And then it has this like a lot of time spent below the low before then below this high before then taking the high and drop. So the initial actual setup is just a swing failure pattern, okay? So what happens is you'll see, if we just draw a line here, for example, you have this high, you'll then end up seeing a SFP above the high and then a drop. Now, what's actually the most important part about this setup is not actually the swing failure pattern itself almost. It's just the context behind all of this here, this sideways price action. Now, what I want you to be aware of the most is the fact that you want there to be as much sideways price action as possible. Generally, a few hours can be decent, depending on the time frame you're trading. It can even be a few minutes, if you're looking at really low time frame charts, which I've done before. My preferred time frames for this is the 15-minute, 30-minute, even like the hourly. You can really spend some time. So let's just imagine this. You've put an initial high on the chart. You then see a ton of new shorts opening. So you've got a ton of new shorts opening here. So the idea is that you'll see, let's say 5, 6, 7 hours worth of price action going sideways, grinding towards the high. There's a lot of new shorts opening, right? You then stop out these new shorts and then see a massive move to the downside. Now, that probably just sounded like a lot to comprehend within the space of like a few seconds or minutes, whatever that was. But the idea now is to talk about how can we recognize a lot of new shorts opening in this case before the high is taken, and actually anticipate a swing failure happening and preempting a really good trade setup to occur. And that's going to be down to exo charts. But the theory behind it is that you have an initial high on the chart, you then see a ton, sideways price action. A lot of new shorts are coming in this case, okay? And where are those new shorts going to be placing their stop losses? Well, more than likely, they're going to be placing them above that initial high. So this is we'll just label this here, your initial high. This is it here, this initial high on the chart, where you got a ton of new shorts opening, and where they're going to be placing their stop above this high. Obviously, you then take a swing failure pattern of this high, stopping all these new shorts out before price can then get the move that it initially intended. Now, a few things we'll go over the exo charts in a second of this, but let's say, for example, here, what's really, really important is a lot of people always on reversals, they always think that you must be seeing like some sort of trap traders, which in this case is semi-true. You can also get a combination of people being stopped out with trap traders, but what's the best scenario in this case, where you will see like a massive drop off in open interest upon this high being swept, because it just validates the idea that everyone who was newly shorting this has just been stopped out. People are newly aggressively shorting, are stopped out, and then you can get the move. So a decrease in open interest in this case actually validates the idea of these eager positions being stopped out really, really quickly. Okay, so let's move over to, I'll show you the low, initial low setup as well really quickly. Then we'll move over to exo charts and go through a few examples. Well, that was really easy to set up. All I did was invert the chart really quickly, because all this is now is you've got an initial low on the chart. So this is your now initial low. Whoops. If anyone wants this officially, initial, sometimes my typing is too quick for this, initial low. And rather than seeing a ton of new shorts open that would be stopped out, in this case, you don't want to see a ton of new shorts really. I would prefer to see a ton of new longs opening. So essentially the idea is that you see a ton of eager long positions, okay, opening on this like grind down towards the low. You then see a sweep of the low with a decrease in open interest again, before then seeing a move to the upside. Now, the entry and invalidation on this one is simply the 15-minute, generally I just trade the 15-minute candle, which is like the wick below and close above the level, with the decrease in open interest within that candle, which then gives us a decent move to the upside, in confluence with a ton of other factors, which I haven't discussed yet, and I won't discuss in this video probably because they become a bit too nuanced. But this hopefully makes a lot of sense to you, and let's just really dive into really briefly on how exo charts, you can identify a ton of new longs opening within a certain period of price, or a ton of new shorts, and just the general context of the market within a certain time frame, because that's going to be really useful when trying to trade these types of setups, okay? But don't forget, one of the most important things is that you actually have a lot of decent amount of time between the initial low putting in and, you know, once the low is then taken. There should be like a decent bit of price action time spent between that, you know, between that gap. So let's move over to exo charts now and go over this now. So in this example, we're going to kill two birds with one stone because it covers an example, you know, but also I can cover how to identify a lot of longs or new shorts opening within a certain period of price action. So this is exo charts desktop. Okay, on an exo charts desktop, you've got a ton of new tools. Again, I work with them, really good company. A lot of tools there that you can be using. But essentially here, you've got to come over to the left-hand side. You're going to find this dynamic profile tool. I've got it set up to my hotkey D, you know, and then basically you can drag anything and you're going to get a ton of different data points, which we're going to cover in a second. But the idea is what I want you to recognize first. So you've got this initial low in on the chart. This is your, you know, like I literally described before, initial low on the chart. Okay. You then want to be aware of all this price action going sideways before that low is then tested. What's going on? You know, grinding down towards it. Take this dynamic profile tool, and I don't want to cover the candle itself of that low because I don't want this data. I want what's going on after this candle. Okay, so I take this candle, drag it on towards, you know, you can, you know, and at this time I'm just dragging it, you know, however much you want to be dragging, you know, along this type of period of time, you know, until that low is then tested. But let's even up to the time of where it is then tested. Okay, let's just take it to there. You know, you've got a ton of different settings on this tool, by the way, for those interested. Here are my settings, just very briefly. Long plus short exit. Generally, I'd probably change this to short versus long new. Okay, but you've got this setting here. It doesn't really matter because the most important thing on this one, I'll cover this whole tool in a separate video, to be honest, in more detail. But the most important thing here is the CVD and the net OI change. CVD is going to be telling us simply market buys or market sells. You know, CVD is increasing. That means there's more market buys coming in. Net OI change, which is positive, tells us that there is actually more market, you know, new positions coming. There are new market buys coming in. So the CVD tells us market sells or market buys, simply like that. You know, if it's positive, then that's market buys. If it's negative, that's market sells. If you've got net OI change, which is positive, that is new positions coming in. So you've got market, you know, market buys coming in, and that's new market buys coming in because this is any form of positivity. Any form of positive net OI change, I classify it as that. And that's what I always talk about on Twitter, which is just generalizing the data, not always discussing so much the specifics, but generalizing the data. Is it positive, negative, and going from that basis point there. But we've got a lot of new market buys coming in within this period of time. This specific period of time, this pool that we've taken, which is just simply from after the initial low put in to before it was then the low was taken, a lot of new buys coming into the market. Okay, you then take the low, in this case. Okay, a swing failure pattern at the low, wick below, close above, and what do you see at the low? Okay, I won't get into this stuff here. If you're very familiar with my Twitter, you know what's going on within this candle already. But you can see here very, very specifically, the open interest has decreased within this candle. What does that tell us? That those new longs who have been opening throughout this whole period of time that we just discussed through this dynamic profile tool, okay, don't use that candle, you know, they've been stopped out, a lot of them at least, you know, because they're going to be placing their stop losses below here, and then price can get the move it initially intend, which is all this move towards the upside, which is extremely, extremely powerful for you to be understanding. It's a fairly simplistic strategy if you're able to understand the context of it, but this, you know, don't underestimate the power of this dynamic profile tool. It's got a lot of different use cases, which I'll be covering in a completely separate video. I'm releasing a lot of different threads on my Twitter, really going over initial high-low strategy. You've probably seen this over there in a written format, but I thought I'd put it over here in a video format for you if you wanted to understand it this way a bit better. Tons of different threads going over there. It's just at luxury with an extra Y, if you want to call it Twitter, it's X, whatever. Go over there, check out my Twitter, consistent threads over there on probably every other day or so at the moment, and we'll keep that up. And yeah, hopefully you found this interesting and valuable.